What I learned the hard way is that ethics in trading are not about morality. In the abstract, they're about alignment. Alignment between what you say, what you do, and what you can live with when the screen goes dark. The market doesn't punish unethical behavior immediately. Sometimes it rewards it. That's the dangerous part. Cutting corners can work for a while. Misrepresenting risk can attract capital. Selling certainty can earn applause. But those gains come with a hidden cost erosion of self-trust. And once you lose trust in your own process, everything becomes negotiable. I saw traders manipulate performance numbers to attract investors, only to end up trading defensively, terrified of drawdowns because exposure would reveal the truth. I saw others take advantage of less informed participants, front-running ideas they publicly promoted, justifying it as being smarter, sharper, faster. They made money, but they lost something else: the ability to trade cleanly without looking over their shoulder. Ethics aren't about being nice. They're about removing friction from your decision-making. Every lie you tell creates a position you have to defend. Every corner you cut becomes a rule you have to remember when pressure is high. Over time, that cognitive load shows up in execution errors, emotional overreactions, and rationalizations that feel logical in the moment, but compound damage quietly. One of the most important ethical lines I had to draw was around responsibility. Early in my career, it was easy to blame the market, the broker, the news, or manipulation when trades went wrong. That blame wasn't just emotional, it was ethical. It allowed me to avoid ownership. And avoiding ownership is one of the fastest ways to stop improving. Ethical trading starts with radical accountability. You take responsibility for your size, your timing, your rules, your mistakes. No excuses. Once I accepted that, my trading became cleaner almost overnight. Not easier, but cleaner. Another ethical trap I fell into was selling certainty to myself, convincing myself I knew what the market would do instead of admitting I was making a probabilistic bet. That self-deception is common and it's corrosive. When you lie to yourself about uncertainty, you oversize. You stop listening to price. You hold losers because you're right. Ethics begin internally. If you're not honest with yourself about risk, nothing else matters. Over the decades, I learned that ethical traders don't promise outcomes to themselves or to others. They promise process. They don't hide drawdowns. They contextualize them. They don't chase money that requires them to abandon their rules or their values. And yes, that means leaving money on the table sometimes. But the money you don't make by crossing a line is often the money that saves your career later. I also learned that ethics extend to how you influence others. Teaching, sharing, mentoring, these carry responsibility. When you present trading as easy, fast, or guaranteed, you're not just misleading people, you're transferring risk without consent. I watched entire waves of new traders get wiped out, not by the market itself, but by narratives sold without context. That kind of harm doesn't show up on a balance sheet, but it matters. Ethical trading means respecting the asymmetry of experience. It means knowing when to speak carefully and when to stay silent. And perhaps the hardest ethical lesson of all was learning to say no. No to capital that came with pressure to perform unrealistically. No to strategies that worked but turned me into someone I didn't respect. No to shortcuts that promised speed at the cost of stability. Each no felt expensive in the moment. Each one proved cheap in hindsight. Because every ethical compromise narrows your future options. Every ethical stand, even when it costs, you expands them. As I look back, now having survived multiple market cycles, I can say this with clarity: earned through scars. Ethics in trading are not about righteousness, they were about longevity. They determine whether you can adapt under stress, whether you can accept losses without denial, whether you can keep executing when no one is watching. The market is a mirror. It reflects not just your strategy, but your character under pressure. And if there's one thing I want you to understand before you get too deep into this game, it's that you don't rise or fall to the level of your intelligence. You rise or fall to the level of your standards. Standards that are tested most fiercely when cutting a corner would be profitable, and doing the right thing would be inconvenient, because that is where ethics stop being theoretical and become practical, lived and inseparable from performance. And that realization marked the moment I understood that trading ethically wasn't about impressing anyone else. It was about building a foundation strong enough to carry me through drawdowns, success, temptation, and time, a foundation that only holds when you're willing to choose consistency over cleverness and responsibility over excuses. And that foundation becomes visible only when the pressure is on, and the easy path is right in front of you, inviting you to step onto it, just once, justifying it as harmless, temporary, necessary, when in reality those small steps are exactly how traders drift away from the discipline and clarity they need most. And learning to recognize that drift early is what finally taught me how to see ethics not as a constraint, but as a form of risk management that protects you from becoming someone you can't trust, in the moments when trust matters most. And that understanding brings us naturally to the next part of this story, where ethics stop being abstract principles and start becoming daily decisions about size, honesty, influence, and accountability. Decisions that determine not just how much money you make, but whether you're still standing years from now, able to trade cleanly, think clearly, and live with the choices you've made. Because in the end, the market doesn't care about your intentions, but it always exposes your behavior. And whether that exposure destroys you or strengthens you depends entirely on the standards you chose to live by, when no one was forcing you to choose standards that only truly reveal their value when the temptation to abandon them is strongest. And that is the moment where ethics in trading stop being something you talk about and start being something you practice, something that either supports your longevity or quietly undermines it. And that is what finally taught me what ethics in trading really mean, not as rules written on paper, but as the invisible structure that holds everything else together, and without which even the most profitable strategy eventually collapses. A truth that only fully sinks in when you've seen enough talented traders destroy themselves, not because they didn't know enough, but because they crossed lines they never bothered to define. And once those lines were gone, there was nothing left to stop the slow erosion that ends careers quietly, predictably, and completely, an erosion that can be avoided. If you understand early enough that ethics are not optional in trading, they are the framework that determines whether your success is temporary or sustainable. And that framework only works when you're willing to defend it, even when doing so costs you in the short term, because the short term always tempts. But the long term is where trading careers are decided, and understanding. That is what ultimately taught me how to live with my decisions long after the trade was closed. Because once you understand that ethics are what allow you to keep trading without inner conflict, they stop feeling optional and start feeling essential. In the later years of my career, ethics stopped being something I thought about only when teaching or advising others, and became something I enforced ruthlessly in my own process. I learned that every ethical shortcut, no matter how small, introduced noise into my decision-making. If I exaggerated results, I felt pressure to defend them. If I bent a rule, once I spent the next 10 trades wondering whether rules mattered at all. That internal friction was expensive. Clean trading requires a clean conscience, not because the market cares, but because you do, and you carry that weight into every decision whether you admit it or not. I learned to draw hard lines around honesty in my records, in my risk assumptions, and in how I talked about my results. No smoothing drawdowns. No hiding bad months. No pretending discipline was stronger than it was. That honesty didn't make trading easier, but it made it lighter. I could focus on execution instead of image. I could take losses without inventing stories. I could adjust without ego getting in the way. Over time, I noticed something subtle. Ethical clarity improved my risk management. When you're honest about uncertainty, you size appropriately. When you're honest about variance, you don't overpromise returns to yourself or anyone else. When you're honest about your limits, you step aside before damage compounds. Ethics became a form of self-protection. I also became far more careful about influence. I stopped sharing trades in real time. I stopped presenting ideas as outcomes. I spoke more about process than profit. Not because I wanted to be virtuous, but because I understood the responsibility that comes with asymmetric experience. People don't hear caveats when money is involved. They hear confidence. And confidence, when misplaced, transfers risk unfairly. Refusing to do that cost me attention and opportunity at times, but it preserved something more important: alignment between who I was as a trader and who I was as a person. And kid, that alignment is rare in this business. Most traders don't fail because they lack skill. They fail because they create a gap between their values and their behavior that becomes impossible to manage under pressure. Once that gap exists, stress multiplies, mistakes escalate, and discipline erodes quietly. Ethics close that gap. They don't make you profitable, but they make profitability sustainable. And if there's one lesson I want you to walk away with, it's this: the market will test your ethics, not when you're losing, but when cutting a corner would make you money. That's when standards matter. If this story helped you think differently about ethics, not as restriction, but as risk management for the long run, take a moment to leave a comment with your thoughts. And don't forget to subscribe so I can keep sharing the lessons the market spent a lifetime teaching me.